Hi, I'm Nicholas Schneider, here with another update on the LNG shipping markets. Now, if you've been following charter rates, you know that this has been a challenging quarter for vessel owners. And in this video, I'll talk about what has driven rates lower and also when we expect to see rates begin to improve. The main problem for vessel owners is that the amount of LNG traded globally has not increased much in the last year. Global LNG imports increased only by about 1% in 2014 and increased only by about another 2% in the first quarter of this year. Now, LNG imports into Europe did increase strongly by about 20% year over year in the first quarter of 2015. And this has largely been due to the fact that with low LNG prices in Asia, it hasn't been as attractive to send cargoes long haul to Asia, and instead cargoes from the Atlantic Basin and Middle East are instead going to Europe. However, this increase in imports into Europe has been offset largely by decreased imports into China and South Korea, largely due to mild weather, which has reduced power demand, and also an increase in energy sources from non-LNG supply, such as coal and hydroelectric sources. While LNG trade hasn't grown much, the size of the LNG fleet has. The LNG fleet increased by about 9% in total cubic meter capacity in 2014, and by about another 2% in the first quarter of 2015. As a result, the number of vessels available on the spot market looking for charters peaked at about 50 vessels near the end of the first quarter of 2015. And this is a significant increase over the roughly 10 to 20 vessels available on the spot market throughout 2014. As a result, short-term charter rates for LNG vessels have fallen to around $30,000 per day. And this is about the weakest rates we've seen since about mid-2010. As a result, we expect short-term charter rates to remain weak throughout most of this year. There is some light on the horizon. The number of vessels available on the spot market has decreased in recent weeks, and we expect the number to fall further towards year-end as a number of new export projects start up. In fact, there are 4 new export projects scheduled to start in the second half of 2015, 3 in Australia and 1 in Indonesia, in addition to the second export train at the QC LNG project in Australia, which already shipped its first cargo in December 2014. In addition, the Angola export project, which has been offline for some time now, is scheduled to restart in December of this year. As a result, while we expect 2015 to be the bottom of the market, we expect vessel utilization and rates to improve from the end of this year. Now, despite this current weakness, our long-term forecast out to 2020 is largely unchanged. There's already more than 120 million tons of export capacity, which has reached final investment decision and is in various stages of construction for startup by 2020. In addition, new export projects in the U.S. continue to advance. Cheniere Energy recently took a positive final investment decision on their Corpus Christi LNG export project, and this will be their second export project in the U.S. Gulf after the startup of their Sabine Pass project in early 2016, for which Teekay is providing our first 2 MEGI-powered LNG carriers. In summary, despite the weakness in current rates, we see that the long-term growth of the LNG export market remains on track. That's all I have to say for today. Thank you very much for watching, and I'll be back next quarter with another update.